Hello, everyone. Can you guys hear me all right? Yeah, I don't think there's any issue with the audio. I think it was just the camera. We good now, Bear? All righty. Thanks, sir. All right, man. Appreciate you. All right, guys. We're rocking and rolling here. We are good to go. Had to get the camera fixed. Not sure what was going on there. Giving me some trouble here. All righty, guys. Apologize for that. Thank you for your patience. All right, I can hear myself. I think we're good to go. Happy Sunday, guys. Glad to have you back. Happy to be here with you guys. All righty. So let's go ahead and get into the business here. So I got NASDAQ up. We'll get to that lovely asset here in a moment. As usual, we'll go through the usual rundown dollar bonds indices. And then as always, I'll get to you guys lovely questions here at the end. So if you guys have some good ones here ready for me. Williams, hello, sir. Good afternoon. Good to be here. Glad to have you. Oh, and you also asked a really important question in the main chat. I've just had such a slammed week, getting back into the groove of things, getting my team built up, finishing everything that I'm doing. So I've actually had a pretty slammed week, but I meant to get to your question, Williams, with regard to London lows. You asked a really good question. How do we know when the low of the day is going to be priced in London? And how do we know when New York's not going to sweep London low? It's actually a very simple procedure. The key is obviously you have to know the direction where the market's drawing to. And then the other component is you have to understand market structure. And then if you understand market structure, how sponsorship comes into the market at certain lows, then you'll know how to know which lows are going to be defended and not attacked. And you're going to know which lows by derivative should be. So I'll share that with you. That was a really good question you had in the chat. And I think a lot of people can stand to benefit from that answer. So I'll go ahead and get to that one when I get into the Q&A. If I don't get to it, please do remind me because it is an important one. Aslam, welcome back. Glad to be here, sir. Carl, yes. Glad to have you, Carl. Cyclops, thank you, sir. Amy, hello, hello. Creative wall printing, hello, sir. All right, guys, let's go and get into it. So before we get into the business here today, I want to cover kind of what we were looking at last week, what my expectations were, and what we ended up seeing. As a summary for me on my last trading week, my executions were not on point. So the analysis in terms of the targets, where the market was drawing, dead on, easy money every single day. Now, where I fumbled was on the executions. So it just goes to show you can have the right analysis, you can have the right bias, you can know exactly where the market's going to deliver, you can have the winning lottery numbers ahead of the new week, but even if you fumble and mismanage the executions, you can still have an unprofitable week. So I had a small red week last week, very easily fixed, accounts not roasted, I'm not doing job applications, nothing like that, right? Just a usual week in the office. So I'm gonna start in drawdown protocol, make that back nice and steady. And then another good example that I did want to highlight is someone that did execute very well. One of my #1 analysts, Tommy, he absolutely crushed it this week. And one of the interesting things is we took the same setups, right? So we're bullish on the higher time frame for NASDAQ. So at 9:30, you do what? With the one setup for life's teaching. Expect the manipulation, buy below the 9:30 open, easy money when you're bullish. I did that. Tommy did that. He managed the trades better and he had a pretty good profitable week. And I did not because I was looking for better targets. So one of the things that was difficult, not I'll share that with you guys, kind of what was some of my sticking points so I can go and show you some of the trades that I took, was I just couldn't get follow through on any of the setups. So I was in a lot of good open profit in a lot of the trades I was in. But because I just had one contract trading my lowest leverage, I wasn't able to actually peel off partials. So a lot of it was just getting into trades, being a nice open profit, and then the market rolling back and stopping me out in some decent profit. So with that in mind now, one of the things that I will be adjusting going into the new week in terms of adjustments. So it's not like I'm throwing my trading strategy out. And that's why I want to share this with you guys, because you guys are going to have weeks where maybe you don't execute well, maybe you had the wrong analysis, whatever the case may be. But it does not mean that the strategies aren't effective, right? So I'm not looking for a new strategy over the weekend. I'm not reading up on trading books to learn how to trade going into the new week. We're doing the same thing, right? Because the models are very effective. They work. I just need to adjust my trade management to reflect the market conditions that we're in, right? Which has been a lot of lack of follow through. So now that's feedback that I'm getting as the analyst that, okay, I need to do what? Pay the trader more aggressively. So when I'm in 45, 50 handles of profit, take it, pay the trader, and then come back the next trading day. So just a reflection on my end, whenever you have a difficult week, that's usually where the biggest growth is going to happen. And that's why I want to use the opportunity that I've been in this week to highlight this to you guys. Because you guys are all going to be in situations where you go in the drawdown, where one losing trade turns into 2, turns into 3, and maybe you have a red week. But it does not mean you throw the baby out with the bathwater. It doesn't mean your strategy shit. It doesn't mean you don't know what you're doing. It's part of trading. And as long as you manage the risk, you live to fight another week, and you can still finish the month, and you can still finish the year very, very profitable, right? So don't get caught up in short-term thinking. This is a long-term game. All right, guys, so let's go and get into it. Let's take it from the monthly chart here for dollar, and then we'll get through it. And then, like I said, I'll get through some questions for you guys here as well. Alrighty, so monthly chart, everything's good. Yeah, good. Audio good, camera good. All right, we are rocking and rolling. All right, guys, so monthly chart for US dollar. I did a much more detailed breakdown last week, so I'm not going to rehash everything I've talked about. So just know why we're bearish. A lot of that was covered last week. I'll get into some of the details here, but I did a much more detailed, thorough breakdown last week with the 3-month chart, the monthly chart, and all those lovely factors. Like I said, I'm not going to rehash all that here, but if you do want a more of a behind the scenes, more intricate breakdown, do refer to last week, because what we talked about last week is indeed what we saw this week, and that's going to be the basis of my analysis going into this week as well. All right, so monthly chart for US dollar here. We've been watching that gap. We traded up into it, respected the lower half. So for the monthly candle, given that we hit that, sold off, we're looking for heaviness on the monthly candle to attack sell side here, and then potentially the sell side down here if we continue selling off and we continue seeing heaviness in the US dollar. All right, working down into the weekly chart here. Right, we can see we had that monthly gap, these up close candles. We traded up into it here, strong rejection to the downside. And then last week, what was the weekly bias? It was bearish. Now, again, I did cover that, yes, my bias is bearish, but what are we in the dollar? We're in a consolidation, or we're in a holding pattern, where that basically essentially just means that we're staying in a range. It's not in a hurry to break out the low or break out the high. Again, not that we're breakout traders, but as traders, as short-term speculators, we need volatility, right? We need movement. So consolidations can be a little more difficult. So if Forex has been difficult for you guys that are trading the currency side, it's because of what we're seeing here. They're holding the dollar very tightly. So with that in mind, still bearish, still looking for lower prices. We did get a little bit of a move last week. Of course, nothing to get excited about because of the broader context that this market is in, which is a consolidation market profile. So everything's still bearish. Everything's still pointing lower as of right now. So still looking for this low here at the 97.109 level. And if we flush through that, we have the 96.377, and then you can even split that wick in half as a downside target as well. We do have FOMC this coming week, so just being mindful of the economic calendar. You guys are going to get a very detailed breakdown on the economic calendar and how we're using that, myself and my team, and you're getting that straight from my #1 analyst who's been working with me for 3 years, who is an absolute beast in these markets. So you're going to get that insight from him and how we're going to use the economic calendar going into the new week. The reason I'm bringing that up is because we've been in a consolidation for a while. I'm thinking that with all the hype built around this FOMC that we're going to be going into on Wednesday, the interest rate announcement, I have a feeling that that's going to be the catalyst that breaks us out of the range. So we might have a more quiet dollar Monday, Tuesday, and then we'll see what they do on Wednesday in terms of the market leaving this range. But as of right now, everything's still bearish, everything's still weak, and the targets that we had last week still remain my draw going forward. All right, so daily chart, now we can even more clearly see this nasty consolidation that we're in. Although we did gravitate to the downside, it's been very muted and lethargic. So again, as long as we're below this up close candle here, which is a bearish order block, I'm bearish, looking for lower prices. And now we have these relatively equal lows that I'm thinking they're setting up as some kind of support idea, and then they're going to use FOMC, or maybe even sooner, to kind of roll it down into that, and then potentially the low all the way back here. So order flow remains bearish. We're seeing gaps here, hit, respected, up close candle, inefficiency, all respected. So in a very straightforward, simple way, like I covered last week for you guys, order flow is bearish, or rather a simple way to determine order flow. We can see that it is bearish. All right, working out into our 4-hour chart here. I was watching this inefficiency here. Why this gap? Because it's forming inside of a key swing. So this is an intermediate term high here. So inefficiencies that form inside of key swing points I like to use. So I'm extending this forward. You can see we traded up into that. The body's respected. It sold off. Fair value gap here, trading up into that, respecting it so far. So based off where we're at right now, we should rotate from here and attack the sell side. But again, do keep in mind we are in a broader consolidation. So in summary, I'm bearish on dollar. Everything's looking for lower prices unless we get above this 4-hour gap here. If we get above this 4-hour gap and take out this high here, then I am neutral on US dollar. So pretty straightforward in terms of what we're looking at going forward. So let's look now to confirm that with the bond market. And bonds still remain inside this higher time frame consolidation. Just want to take your attention to that before we drop down into the weekly chart. Yeah, so weekly chart, we have a little fair value gap here below market price now. So I want to see how we trade into that. So that weekly fair value gap they're in right now is going to tell me whether or not they're going to attack the buy side or not. So if we're going to see the highs, let me zoom out here. If we're going to see the highs taken out here and here, then I need to see that weekly gap that is below market price. I need to see that support price. If we lose that, then the buy side or the highs are no longer of interest to me. So that's what I'm looking at for bonds. And daily chart, you can refine that weekly gap that I was just referring to. You can even refine that down to the daily just for further precision elements there on bonds. So still looking for that buy side we talked about last week, but the daily fair value gaps right now need support price because that's the most close proximity discount level that we're trading in now. So that's what I'm going to be watching here going forward. All right, moving right along to NASDAQ here. So let's take it from the, let's go to the monthly. I don't need to talk about the 3 month. We already talked about the 3 month last week. Let me take off the Fibonacci here. I want to keep it clean, and I'll share with you guys what I'm using for targets because we are now at all-time highs. For those of you guys that may be new here, all-time highs means you keep trusting buy models. You keep looking for higher prices. Again, if we look at, we're looking at monthly candlesticks right now. So each candle we're seeing is a full month in duration. From April all the way to the highs here, we have been bullish on this market, avoiding calling a top. Again, when markets are bullish, when they're at all-time highs, it's not something you want to stand in front of. It's like a freight train. So you want to stay in line with higher prices, keep trusting your buy models, looking for higher prices. You do not want to say, oh, well, we've already gone up a lot, so I'm just going to go short. Fuck it. That does not work in these markets. So keep looking for higher prices, keep trusting your buy models, especially when we're at all-time highs. All right, so zooming into the business here so we can see the actual candlestick formations. I have a big ass 27-inch monitor, so it's big on my screen. I just want to make sure it's big enough on your guys' screens where you guys are watching this. So I want to zoom in here. All right, so last week we talked about the monthly candle opening and dropping, and we're going to look at this on the lower time frame, and I want to show you when this wick formed. So generally, non-farm payroll week, the first week of the month, is the week that the monthly wick is going to get created in, right? Because if we're bullish, then we're going to expect what before the expansion, a measure of manipulation. Generally, that manipulation is going to take place during non-farm payroll week. So that's why I'm very comfortable being neutral on non-farm payroll week, not taking a lot of trades, because then once I'm able to see that, okay, the low of the month is priced in, that makes the bias easy. I know what to look for. I know the monthly candle is going to expand higher. I know the weekly candle is going to expand higher. And then by derivative, I know the daily candle is going to expand higher. So I'm very comfortable passing up that first month of trading that first week of the month of trading, because I'm able to get that insight as to what they're doing in terms of the wick and pricing in the low of the month. So we opened, we slammed lower, we hit the midpoint, or the wick consequent encroachment, which is the midpoint of this wick. We found support there. We covered last week how that is a bullish signature. So we had a drop here below the monthly open, which is a Judas swing or a manipulation, a protraction. And then we had the previous month's high here as the draw, and that was nicely blown out. So I'm not expecting high to be taken out reversal. I'm still looking for the market to trade to and through that high, especially on the basis of everything we're seeing here. Gap left open, everything signaling that the market is extremely bullish. Excuse me. All right, so let's drop down to the weekly here. All right, so zooming out here, looking at the institutional order flow on the weekly chart, we're seeing down close candles, gaps, all supporting price. So that gives us a initial soft bullish bias, but now we have to zoom in and look at the actual candlesticks. So looking at the range that we're trading in here. So we talked about this down close candle being a bullish order block last week. So let me extend that through so you guys can see that. And a little too dark. There we go. So we were talking about the down close candle being an order block. I like how the body stayed in the upper half, so that gave us a easy weekly bullish expansion last week to blow out the swing high here. Why that swing high? Because there's going to be buy stops there, right? So I tell you guys not to try to call a top, but people are doing that, right? So unfortunately, not everybody's able to be here on YouTube. So when the swing high forms here and they drop it like this, funds, retail-minded traders are thinking, what? Oh, it's a top, right? Swing high, it's breaking down, time to go short, and they're going to put their buy stop above this high here. That's why we were gunning for that this week. So that was in the crosshairs. Nicely delivered from the bullish order block here. So I'm going to take that off here. Whoops. All right. So we saw, this is the monthly open. That's what MO stands for, monthly open. So we saw the monthly open. We dropped, created the wick. We took out sell side here. And then once we had that manipulation, it was easy for me to go into this week and trust that we're going to see a bullish weekly candle. Because why? We're bullish. We already took out sell side. Remember what you've learned if you've been working with me directly. Anytime sell side is taken or liquidity is taken when you're bullish, that is going to pour gasoline on whatever you're looking for. So if we're bullish and we just saw liquidity run here on the downside, then we're going to expect a fast repricing to the upside. Those were all things kind of behind the scenes that allowed me to trust what I was looking for last week. All right, so working down into the daily chart, and then I'll give you guys the projections and things I'm looking at there. Alrighty, so looking at the daily chart now. Oh, sorry. Well, looking at the weekly, I'm looking for another weekly bullish expansion. So we dropped down, we took out sell side, we took out this high here. So I'm expecting the market to keep expanding up through that. So I'm going to give you my upside targets. Just know we're looking for a bullish weekly candle and a continuation of what we saw here in the previous week. Why? Because again, the monthly candle's bullish. So we're in distribution. All right, so now working all the way down to the daily chart. Let's go ahead and zoom in here. All right, so we had the monthly open here, and this is Tuesday, the first week of the trading month, but there's also non-farm payroll week. They dropped it down, sunk it. They took out the sell side here. Quick rejection higher. We talked about this being a bullish breaker. I have the high labeled, but I'll extend the entire range through here. And you can see how that was used really nicely as support. So we got above it, support, support, launches us into the buy side there. So I'm gonna take off the rectangle here. Buy side cleared. We're looking for continued expansion higher. So let me, so this is one of the projections I'll be using this week. This breaker leg here, -1, -1.5, -2. Those are all gonna be upside targets I'm using. And then also share with you guys some other insights that I'll be using there. So the breaker found support. We took out this high. Want to see speed through that high if we're going to keep trading higher. We don't want to see kind of like what we saw here, trade above the high, pull back down into the range, because then we'll likely have to sit through more range bound consolidation. So we're consolidated, or we've consolidated rather. We've now left the range to the upside. Now we want to see continued expansion, and that's going to make for much, much easier trading now that we're leaving the range here. All right, working down into our handy dandy 4-hour chart here. Let's go ahead and look at the monthly open so I can show you guys kind of how monthly power of 3 works. You guys can kind of see what's going on in my mind behind the scenes when I'm looking at intraday price action and how I'm looking at it top down. All right, so looking at the 4-hour chart here, we can see that daily bullish breaker. So again, you have to carry your premium arrays and discount arrays from the higher time frame down, because when you see the market dropping here on the 4-hour chart, you may think, oh man, the market's going to crash. Look, we created a swing high, we broke down, but all it's doing is dropping into that daily bullish breaker block to what? Accumulate more orders to send it to the upside. So this is why, again, you have to carry your higher time frame key levels down so that you're not in confusion on these intraday lower time frames. And not that the 4 hours is a lower time frame, but it is a lower time frame than monthly, weekly, daily. All right, so we have the monthly open here. So when the new month opens, think like the 9:30 open. If we're bullish, what do we want to see at 9:30 or at the opening? We want to see a drop, because retail is going to try to short it, and smart money is going to go long below the opening price, and they're going to buy the sell stops. So we see the opening here on Sunday, which is the 1st of September, which is Monday, kind of first trading day. They drop it, they take out sell side below the monthly open, and then the market rallies, clears out this high here, and then what you're looking at is the monthly candle open low, and then you're looking at the high, and now we're looking at the distribution on that monthly candle. So that's how you look at the power of 3 top down. So now looking at this here, sell side taken here, expansion higher, retracement, hits the down close candle or the bullish order block here. We talked about this fair value gap here on the 4-hour chart, and we were saying if we're going to get up into this high here, we should trade through this 4-hour fair value gap. We did. So we traded through it. Now that's the confirmation, right? So it's one thing to have the drawn liquidity be here, right? So I'm telling you the market's going to go for this high. That's what we're looking for. But now we need confirmation in the order flow, right? Because if we have this gap here and then we trade up into this gap and hit it and sell off, is that qualifying what I'm looking for in terms of the high? Absolutely not, right? But if we trade to it and through it, now the algorithm is signaling that, hey, look, we're disrespecting this level. And then it's going to become what? Inversion fair value gap. Bam. Hits it. It's going to reverse its role. You see they use it here, long, rallying up into the buy side. So I was getting some questions with regard to intraday trading. So I know you guys see a lot of what I'm doing, intraday trading, these 1 minute, 5 minute, 15-minute charts. However, if you know what you're doing, you can make money on a 4-hour chart. You can swing trade with this logic, because if you understand where the monthly and the weekly candle's going, swing trading is super easy. You can literally close your eyes and throw a dart on the wall and make money if you're swing trading and you know where the weekly and the monthly is going. So don't just get caught up into thinking that this only works on 1 minute charts, because that's what I'm doing. It works on all these time frames. And even Testament, my man Joe, I'm not even sure if you're in here, but he's learned the skill set that I've been working with him over the last year and a half, and now he has his own swing trading models, his own profitability, and he's trading different asset classes than me. He's trading stocks, like specific stocks, not stock equities, the indices like I'm doing. And he's found his model. So the cool thing is, once you learn how to read price, you learn how to find a model, you learn what these candlesticks are actually doing, you can trade however you'd like. So don't get limited in thinking, oh, I can only scalp, or this stuff only makes money on intraday time frames. That makes money on all time frames, but you have to know what you're doing. So daily bullish breaker, extend that through, hit that here once, twice, rally, and then they clear the highs here. All right, so now dropping down into the hourly chart. I was getting questions last week as it relates to weekly templates and kind of how I use that. So let's go ahead and dive into that and talk about that here for a moment. So we had the monthly open here. We're bullish. We dropped down. We made Tuesday low of the week. Classically, like that's generally the template I'm looking for. So we dropped down the previous week, Tuesday low of the week, expansion. Then we make the high what on Friday. Then we get a nice TGIF retracement. So now looking at where we're at going into the new week, we understand the draws here and that the weekly candlestick is opening. Get the weekly open on here for you guys. All right, so here we have the weekly open. So in terms of weekly templates and weekly profiles, we're opening up inside that daily bullish breaker block after we already took out sell side here. So the market is in what? We've already seen accumulation, manipulation happen. So what phase of price are we in right now on that monthly candle? We're in distribution, right? So if we're in a distribution, after we open here, we already saw the TGIF done on Friday, so we don't need to retrace on Monday. So it's more likely to do what? Open, rally into Friday, close near the high. So in terms of weekly templates, like I was talking about last week, it's great to understand the different templates, and especially the ones that ICT's put out are really helpful in terms of generic frameworks to look for. But from my experience, one of the best things to do when you're looking at weekly profiles is you have to understand the context. Where are we at? Okay, well, on the monthly chart, we've already priced in the low. We're in distribution. The weekly candlestick's about to open, and we're opening after we already saw a deep retracement into a bullish order block here, into a discount. So we have a range low, range high, we already retraced to a discount. So when we open the weekly candle on Sunday, does it make sense to need to see a big manipulation and then continue? No, because we've already seen that here. So now in terms of weekly templates, what would I look for? Sunday, Monday, low of the week. So for the low of the week to form early. And then we see that low of the week here forming on Sunday, and then we just expand higher into Friday. So looking at the actual price delivery here, slightly more difficult, right? Yes, the bias is bullish. Yes, targets were delivered. And now this is where I had a bit more difficulty this week. Because I was looking at this high here, I was very confident entering because I'm buying below the open on bullish days. That's my model. So when I'm bullish, and I was getting a lot of feedback on you guys wanting to know about opening prices. So that'll be the next YouTube video I do once I get done with this month 5 content that I'm working with for my private group. So with that in mind, I will be sharing how I use the opening prices because that really is my model. It is that simple. If I'm bullish at 9:30, I want to see a drop below the open, and I want to see him take out some sell side. I had that. My model stormed, I executed, and now the market did not give me the follow through to my target. So that's where I had a bit more difficulty on my end. The models were there, they worked, and they gave me decent open profit. I wasn't able to capitalize because I did not take profit at levels that I should have, because I had better expectations for price, meaning I was expecting follow through, but the market didn't get it. So that's fine. I learned from it, get feedback, adjust my execution for the following week, and that's all there is to do about it. So that's kind of where I struggled this week. Wanted to highlight that for you guys because it's going to happen to you guys. You're going to have weeks where you're just not as dialed in. Maybe your entries aren't that great, or maybe the market just keeps missing your limit orders by a few points and then retraces. Those are things that are going to happen, right? But it shouldn't undo you. It shouldn't make you question everything you're doing. It's part of the game. You have to learn, reflect, and then just improve your execution for the next time. So I wanted to really take some time and share that with you guys because I know you guys see, well, man, Dylan called the targets, man, he's $1 million. Man, that was good. But the analysis didn't reflect on my equity curve this week, not this year, not this month, this week, right? So very important to understand that the short term in trading is not something to get too excited about, because especially with conditions we've been in now, which is much more difficult, right? Because it's really easy for me to go in there, go long, and just hold for the higher time frame draw. I have no problem doing that. But when conditions are more difficult, and then we have situations like this where, okay, I'm in here, I'm bullish, I'm going long on Monday. And then it does what? This high, stop short of it, rips lower, denies me my take profit. Another time it happened here, on this day here, I was looking to go long, stop, did not get to my take profit in the morning session, ended up taking it up there later on in the afternoon. So I was disconnected in price in the sense of I was looking for specific targets that just were denied to me. And that's what can come with always holding for the best case scenario. So as a developing trader, this is something, we always emphasize strongly, is that you want to take partials, because what happened to me this week was easily avoidable. If I just took partials at logical levels, I would have had a green week. But because I had one contract, I was looking for best case targets. That's what ended up kind of getting in the way of the profitability for me this week. But like I said, you learn from it. I wanted to spend some time here so that when you guys run into these scenarios, you guys will be equipped and prepared to handle it, because it's not the end of the world. It doesn't mean you're a shit trader. It just means you need to learn something, take something away from the market. So hourly chart here. Now looking at, let's go back up to the 4 hour so we can talk about kind of this week here. All right, so we have, let's go to the hourly. All right, yeah, so let me share my targets here for this week. All right, so I gave you guys the targets on the daily chart using the daily breaker block here. So you guys have these here. And then I want to give you guys something else as well. So why was I confident in the 2468.5 level? Well, if you look at the monthly, right? Because the markets are rigged algorithmically, you're going to find specific mathematical repeating signatures. So repeating signatures that are mathematical. So what that means is, what really opened my eyes up to this was when ICT was teaching how we can measure the manipulation to predict the distribution. And that makes sense, because if it's being algorithmically delivered, it's going to follow some type of source code, some type of formula. So looking at this here, why would I use this? Well, this is the monthly open. So this is the manipulation of the monthly range, right? So I'm going to measure that manipulation from the low to the high where it starts here. And then look at where -1 lines up. Boom. Right there with that all-time high. So when we're here and I'm giving you analysis, these are things that are going into it. Don't think the fib projections are like a be-all end-all, right? If I did not have these fib projections, right, and I just had the liquidity, it still works. This just gives me more confidence, more degree of I trust it now, because now I have all these other factors aligning for these levels here. All right, so on the upside, we blew out this level here. If we see speed above this high, the next target for me is going to be the, we'll just call it the 24,300 big figure number, but more specifically that -1.5. 24,607. And then if we really get animated, I like the 24,800 level, because we have a convergence there of a couple things. So let me show you that here. Sorry, I like that 24,800 on the upside there. So if we really start to accelerate, make some speed above the high here, then I like all these upside targets. And again, that's all we can do at all-time highs, because again, there's no data here on the left side of the chart. So all we can rely on is our standard deviations from previous market structure, swing points, and other methods and ways to get intraday price targets. So there's a lot of, so for macro targets, that's what I'm doing. For intraday targets, I have other tools that I'm using. So for example, looking at Friday, I did not trade Friday. Why didn't you trade Friday, Dylan? Well, because I was already having not so great week in terms of my executions. So I was like, you know what? If I ever have a really good week, I won't trade Friday. And if I also have a week that's just not going so great, I also won't trade Friday, because I just don't want to dig myself into a deeper hole. The drawdown that I'm in is minuscule. It's made back with one trade, and I want to keep it that way. And I don't want to just keep digging myself into a deeper hole in a week that's proven that, okay, I'm not in sync. I'm not in sync with the market. It's not delivering my targets. So that's fine. I'll just take it easy on Friday, come back next week, get things smooth sailing again. So I want to teach you guys something in terms of intraday targets as well. So I showed you guys how I use the daily. I use the breaker to project targets on the upside. I use the manipulation of the monthly candle. That's great for macro, right? But now how do you know intraday? How do you know what targets to use? Well, I'll use the same logic that I just shared, but I'll use it intraday, right? So I'll measure the manipulation. So this is what a Judah swing here. Why? Because we're bullish, right? This all-time high that I has a target was unrealized on Friday. So because it was unrealized on Friday, that means it's what? It's going to be the drawn liquidity. It's going to expand up into that. So now you have to understand what time of day. Well, we have what? Asia, that's our accumulation. London, that's going to be our manipulation. That's going to price in the low of the day. Williams, your question, which was a good one. Well, how do you know it's not going to take out London low? Well, what did London already do here? London dropped, took out Asia low, ran away from it. So now in our analysis, this becomes what? An intermediate term low, because this low here took out sell stops. And it's happening during the New York session kill zone. So this is what? This is all a Judah swing. It's all a fake run here. Whoops. It's a fake run here. So the Judah swing, when we see that, that is going to price in an intermediate term low because this is a purge on the stop. So it will not come back down below that low. So when you have now London low priced in, you're automatically thinking New York is going to be a retracement and a continuation. So as soon as we open here at 9:30, what do we look for? Manipulation. 9:30 it opens, they sink it into a discount. So they take out sell side. That's going to price in what? A low inside what? This bullish order block here. Why is that an order block? Because it was created on the London manipulation. So London manipulation, that prices in the low. We don't expect this low to be taken because it's key now. So what's it going to drop down into? Bullish order block. In a discount of the range. So we have our equilibrium. 9:30, they drop it. Why? Because interbank traders are looking at that. They're going to buy that. They're going to buy that order block. They're going to buy below equilibrium. And then you see these equal lows here. That's sell stops. They're going to buy that as well. So whenever you see London pricing the low of the day like this, I'm never looking for London low to be taken in this type of scenario. I'm always going to expect New York retracement to continuation. So most of the time, New York will just be a retracement to continuation, but you have to look at what London's done. That's why, in my opinion, you have such an advantage being a New York session trader, because if you know how to use the information of the daily range, if you understand how London is going to give you insight into what New York's going to do, New York's easy money to trade if you know what you're doing. 9:30, flush of the sell stops, and then you ride the distribution higher. Bullish order block here, hit, delivered. All right, so I was going to talk about fib projections. Let me share that here. So we talked about why this is the manipulation, because it's happening after midnight. So after midnight, this is the true day open. So the actual opening of the day that we look at it is midnight. We don't look at the 6 o'clock open. So true day opens at midnight. We drop down, sell side taken below the midnight open. That's key. Institutional sponsorship, expansion, retracement, reaching higher. Well, how far can we reach above this high here? Well, then what I'll do here is I will measure the manipulation from this low to this high. And then I'd use all these as targets on the upside. So this one here is kind of close to this one. So, I mean, that could be a partial, but I wouldn't really use that. So I'd use -1 here. That'd be a good one. See, it hits that. -1.5 hits that. And those are all targets that you could have gotten with the method that I use of measuring the protraction or the manipulation against the run I'm looking for, and then using that to run projections on the upside. So I just shared 2 things with you guys. How I have my macro targets on the daily, the 4-hour, and how I look at, higher time frame targets. But intraday, let's say we're not close to any of those. What do? I'll use this. And there's other things I use. I'll also use the opening range for fib projections. There's a few opening ranges that I use, but I'm not going to get into all that here. That's just way too much. So for those of you guys that are looking for all-time highs, you want targets, that's more than enough. There's a lot of other things I use, but I don't want to get into all that here. That'll turn this into a 2-hour lecture. So with that being said, guys, any questions for me here before we go on any markets you guys want me to look at? Then I would cover that. Here's another perfect example. Let me see. Yeah, so I was going to share more examples of fib projections, but this is the first time we're at all-time high, so that's the only one that would really apply there. All right, guys, so yeah, that's it for me. You guys have my targets, what I'm looking for. I think that's everything. Sure. Yeah. All right, guys, what do you guys got for me? Any juicy ones here? Wall prints, is that a BPR on the 4-hour chart on the dollar? Yeah. Go to DXY. Yeah. So technically, it would be a balanced price range. That is correct. Yes, sir. So because we have a fair value gap here, and then we trade down, and then part of that fair value gap is overlapped with another one, this would be a balanced price range. In my analysis, that is correct. So that's why we hit that here, sold off, because it's a balanced price range. Yes, sir. Or ma'am, I can't tell from your profile. But yeah, that's what I'm looking at on dollar. Please give the stream a like, guys. Yeah, please do. This is helpful. You guys learning something. Please do hit the like button on your way out. That means lower prices. Correct. Yes. So as I said, on dollar, as long as you remain below that level here, I'm looking for lower prices. If we get above it, now I'm neutral on dollar. Yeah, that's what I'm looking at on dollar. Amy, what is the change in state of delivery, and how do you use it effectively for scalping? How can you tell when it's a high probability change in state of delivery or not? That's a great question. So what you're asking about is order block theory. Order block theory, admittedly, is one of the more difficult things to teach because to understand order block theory, there's a lot of other components you have to understand, right? Because it's very similar to the market structure shift, right? Like one of the big things that ICT teaches in terms of market structure, the market structure shift. Well, not everything's a market structure shift, right? You have to understand certain components as to why the market should be bullish, right? Like for example, if we look at this here, right? So when we see, let's say this drop here on Wednesday, right? So when we see this drop here to the downside, I'm not looking at that as, okay, the market took out this low, shifted market structure, we're bearish, the market should sell off from here, right? Why is that? Because logically the market's bullish, it's reaching up here. So the same thing applies to the change in state of delivery or order block, right? So order blocks have to, first you have to understand where the market's going. So unless you can frame with a high degree of probability where the market's going, you're never going to pick the right order block. So first thing we have to understand is where's the market drawing to? What's it likely to gravitate to? Once you know that, now that's the first step in understanding a high probability order block. The other thing you have to understand is timing and price, right? Why should the market change gears at specific levels? So let's go into a perfect example, one that I just talked about here before you ask the question. This here, right? Why is this an order block? Dylan, out of all these down close candles in this chart, why do you reach for that one right there? Phenomenal question. Let's extend that through. Here. Well, like I said, first things first, you have to understand the market's drawing here. I gave that for free last Sunday. So we're on the same page that this is the draw, right? So the market's going to gravitate up into here. So that's the first thing, right? Because without that, there's no qualifying any order blocks. Now, the other thing you have to understand is why should the market change direction here, right? As you said, CISD, change in state of delivery. An order block is the last down close candle before the market changes from a sell program to a buy program, right? So here we can clearly see the market's bearish short term, and then it changes into bullish price delivery, into a buy program. In the transition from a sell program to a buy program, you're going to see a change in the state of delivery, right? So what you have to understand is, well, why would the market change its state of delivery here? Well, now you have to understand a lot of other things, right? Well, what do we expect in London Open? We're always looking for London to price in the high or low of the day. Well, if we're bullish, does it make sense for London to price in the high of the day or the low of the day? Low of the day, because we're bullish, right? So London's going to drop price in the low of the day. Why would they do that? Because if we think like this, if we are trained to look at the market through the interbank perspective, there's traders that are actually in here trading off this. So when the market here drops below the midnight opening price here, during London Open, they're going to scoop up all these sell stops here. They're going to buy that here. So London's going to drop, make the low of the day, and then it's going to expand higher. So now the fact that we understand that, this becomes a bullish order block because it's changing its state of delivery from a sell program on the manipulation to a buy program on the distribution. So you have to understand that the market's drawing here. You have to understand that London's going to make a low of the day. And you have to understand that on this drop here, they're buying. That's why it's a bullish order block. It's in the name. As the market's dropping, they're buying. Why are they buying? Because they're sell side down here. So now if the institutions are buying this down close candle, they're capitalizing what? Long positions. So when the market comes back down into that range and offers that opening price in here, that's doing what? It's offering them another opportunity to recapitalize and accumulate more long positions inside of that bullish order block. Why would smart money want to buy down here? Well, because on 9:30, we're expecting what? That's the manipulation time of the day, right? That's why I said you have to understand time. So 9:30 is going to drop manipulation, offer a discount price. Why is that a discount? Because it's below the 9:30 opening price here. So we have our 9:30 open here. What do you look for in the one setup for life? So the one setup for life and taking that one step further is knowing daily buys. Because I taught in the one setup for life, you just wait for the market to take one side first. Because whatever side it runs for first, that's going to give you insight into where they're going to go later in the day. But if you understand daily bias, I'm predicting 9:30 is going to drop first and then I'm going to go long. So you can actually predict where the one setup for life is going to form if you understand higher time frame bias. That's a whole nother conversation. Looking at 9:30 open though, anything below that is a discount. Why? Because again, the market is bullish. So you have to understand the draw. The market's drawing up here. So anytime the market's offered below an opening price, that's a discount. That's a cheap price to buy it. So at 9:30, we're trained to look for what? Manipulation. If you have worked with someone who knows what they're doing, you should be looking for manipulation at 9:30. And then they do what? They send it lower into what? Bullish order block. So they bought on this drop here, and now they're going to recapitalize more long positions here. And then they're going to do what? They're going to go long below the 9:30 open. That's going to price in the low of the morning session. And then that's going to send us higher. So now if we zoom into like a 1 minute chart here, I need to take this off here. This is not for public consumption. So now going back to your question now, let's look at another perfect example because it works on all time frames. I'm sure a lot of people have this question as well. I see a lot of people talking about order blocks that I don't know a whole lot about order blocks. So let's touch on this a little bit further here. All right. So we covered a lot of factors so far. So we know now why that 15-minute order block back here is an order block, and then we have that extended forward here. So now let's fast forward to 9:30 open. The draw's up here. At 9:30, they sink it. They clear out sell side here. So now this down close candle here becomes a bullish order block. Why is that order block? Well, number one, we know the market's drawing up here. It's bullish. What have we seen at 9:30? We've dropped and we've taken out sell side here. And we've also traded into an order block from London session. For those of you guys that work with me directly, we're going to be talking about all these signatures, and I'm going to show you exactly how I know when this is going to form and how it's going to form in the New York session. That's what month 5 is going to teach you guys. So 9:30, we see a drop here into sell side, into the order block on the 15-minute chart. So with what you understand about price, we understand that the low of the day is going to be priced in post 9:30. So now we have time suggesting what it's dropping. This is going to make the low of the day. So why is this an order block here? We have to understand all those other factors. Number one, the market's drawing up here. We've already dropped and we've made the low of the morning session because we've taken out sell stops at 9:30. And then as soon as we trade through that opening price, that's going to be what? Your change in state of delivery, because the market's changing from a sell model, bearishness, to a buy program. Where's that change happening at? It's happening at the change in state of delivery, which is the opening price here. So as soon as it crosses that opening price, we're now in a buy program. And these are my models. This is all I'm trading. So if you guys want to know my models, I covered that here. If I'm bullish, this is what I'm doing. It really is that simple. A lot of people think, my trading's complicated. It's really not. Now, to learn these things, obviously it takes some study. You got to roll your sleeves up. You got to put in some real work with someone who knows what they're doing. But once you understand it, it becomes really simple. So now you see how easy it is to know, oh, well, I can see why this is an order block. But you have to understand a lot of other factors. So that's why I said, admittedly, before I went into it, order block theory is one of the more harder things for me to teach, because you have to have been with me for a while. There's a lot of other shit you have to know to understand why that's an order block. So hopefully that makes sense. I didn't pass any close, but close to passing one. Weekly session profile. Yep, I covered that. Thank you for the reminder, Shani. What I did differently last week was avoid trading London, using that price action going into New York, limiting my trades to New York AM. Didn't blow any accounts. Last 6 weeks, I blew 8 accounts. Passport. Yeah, it looks like you're making progress then. Looks like you're making progress. So yeah, definitely need to get out of the cycle of blowing accounts. That's easily fixed with the trading plan, knowing what you're doing, and having reasonable, realistic targets. So for any of you guys that may be in that cycle of blowing up, the easiest way to get out of it is you have to have a trading plan. You have to have reasonable expectations, and you have to start slow. Because if you're not doing those 3 things, you are feeding right into what these funded companies want. People that are in there resetting every single week, just donating their hard-earned money away. And it's so easy to fix, but you have to work with somebody who knows what they're doing, or hopefully you'll catch it on some insights on YouTube. So easily avoidable, but you have to get out of that cycle. It's really tough to find consistency when you're in that cycle of boom bust. So first thing you have to do is learn how to keep an account. Learn how to stop roasting accounts. And then once you can do that, then you can start making meaningful progress towards getting consistent. And at the same time, it'll save your bankroll, because now you're not having to shell out resets and new funded accounts all the time because they're being blown. But it seems like we're making progress, though, as long as things are trending in the right direction. It looks like we're blowing less accounts, so I guess that's progress. I didn't pass any, but close to passing one. There you go. There you go. That's all progress. Williams, makes sense. Thanks. Yes, sir. Awesome. I use the jobs data for value gap as an array for the entire week. Yeah, there you go. That's good. Isn't your model mechanical? Yes and no. It's mechanical in the sense that what I look for is the same. Like it can be coded, the strategy that I use. But in the sense of like how I use daily buys, it's not. Because for example, right, like if we have 9:30 open here, and I'm looking at the one setup for life, well, we see a manipulation here. The reason it's a good beginning model is because even if you don't know daily buys, you can still make money with the one setup for life, right? Because what we have equal highs here now. They drop it, they take out sell side, boom, one setup for life, trade it to the upside as soon as we get a change in order flow here. That's great. But now taking that one step further, I can know the manipulation is going to happen at 9:30 because my daily bias is bullish. So that part is discretionary because everything we've talked about up to this point is discretionary. Why I'm bullish on the monthly, the weekly, the daily, the 4-hour. Then once I have all those factors, now I can have a great deal of confidence as to what I should see happen at 9:30. But that's going to be more so the discretionary side of it. So the model, the execution itself can easily be, what's it called? What's the word used? Yeah, mechanical. So it can easily be mechanical, it can easily be coded, the actual execution and the entry and the model. But in terms of knowing why London low should it be taken out, knowing why we're going to make the low of the day here at these lows, those are all things that are discretionary because you have to understand a lot of other components that I wasn't able to teach in a 30-minute video. Eslam, when to expect TGIF to form on Friday? So for the most part, TGIF is going to form when we have targets being delivered. So TGIF can be a tough one as well because, for example, right, if we go to a 4-hour chart, what are you implying by saying TGIF? You're implying that it's a reversal, right, or retracement against what we've been seeing. Well, when institutional order flow is extremely bullish like this, you don't want to go short. So TGIF is great, but you have to understand other components, right? Are we reaching targets going into Thursday, going into Friday? If we have the market reaching targets, then we see a breakdown, shift in the market structure, change in order flow. And those would all be things that I could then use to constitute a TGIF retracement. But you also have to understand order flow, right? So the fact that this high hasn't been delivered, that's going to be the draw for Friday. So I wouldn't be looking for a TGIF on this week because we still have undelivered targets on Friday. So if you understand that targets aren't delivered, we still have to get there before the close on Friday, then you're probably not going to see a TGIF retracement. So a few things that you have to consider. But let's say we reach these targets maybe Thursday going into Friday. And then, Friday at 9:30, we see a repricing higher into buy stops. Then we see a breakdown. Then those would be things that would give me more confidence and confluences to look for TGIF. But unless I have that, you mainly want to stick in line with the order flow. But if targets are reached, then again, you can always consider market reversal profile. Amy, thanks for the answer. Yeah, I hope it was helpful. It's hard for me to explain it because there's a lot of other components that you have to understand for that to make sense. So hopefully I did my best to kind of bring you up to speed as to what you need to know to understand order blocks. But if it wasn't that helpful, it's just because there's a lot I have to be able to bridge for you to be able to know why certain order blocks work or not. But what I shared here is a really good start. And if you study that, then for the most part, you will be able to frame your high probability key levels. But the main thing with the order blocks is it's not a pattern, right? It's not like a shift in market structure or, just looking for them randomly. There has to be a narrative, a logic as to why you would expect a certain level to support price. And as long as you have that factor behind you, then for the most part, you can frame high probability bullish order blocks. Quick question, what is bullish and bearish breaker? How do you use it effectively for scalping? And how do you tell when it's high probability or not? Yeah, great question. Yeah, that goes back to very similarly to what we talked about in terms of what's it called? Order blocks. So for example, just really sloppy. I want to show you an example here, but just so much sloppiness in the price action here. See if we go to another day, it's a little cleaner here. All right, let me just go up to a 5-minute. It'd be easier to find on a 5-minute chart. Breaker. Where are you at? All right, well, let's just go up to the daily chart. I know there's one we're using called this week, so we'll just use that one. All right, so again, very similar to order blocks. You have to understand where the market's going, right? So we understand the market's drawing here. So we had what? This low. We had the run higher, and then we ran out this low here. So in between the stop rate here, this low being taken out, you find the highest up close candle inside that range. So inside this range here, the highest up close candle is this. If we are bearish, the market will hit this up close candle and sell off and be a bearish order block, right? That's logical. However, if we're bullish, then it would go without being said that this up close candle is not going to be a bearish order block to send us lower. It's going to be used as what? A bullish breaker. So kind of like an inversion fair value gap, very similar to what I just covered here. All these PD arrays have an inversion aspect, right? So this fair value gap here, you might just look at that as a fair value gap. And if you're just a casual watcher, you think, oh, look, fair value gap. I think ICT says, you should sell short here. So boom, let me sell that. And then you get toasted. You have to understand again where the market's drawn. So the market's bullish. So because it's bullish, this gap, would we expect it to be a resistance, to be a sell-off? Or would it be used to be a support? Support, right? Support here, rallies. Well, all the PD arrays behave the same way. So a bullish breaker is a failed bearish order block. So this up close candle is not going to be a means of resistance because we're bullish. So it's going to be what? It's going to invert its role. It's going to be an inversion. So instead of a bearish order block, it's going to be a bullish breaker block. So you get above it, use it as support, rally. So again, you have to understand, very similar to order block theory, right? Where's the market going first? And then once you understand where it's going, then you have to understand your PD array matrix. You have to understand how to use fair value gaps, breakers, order blocks, old highs, old lows, turtle soups, all that good stuff. Do you compare ES and NQ every morning? Yeah, I watch them both together. I'm watching both ES and NQ every day. And then can you walk us through what happened Friday? I did. I just did a short review on what I was looking at on Friday, how I looked at the daily range and how I broke all that down. So you can check out that review. The recording will be available. What was the opening range indicator? Yeah, that was an accident. I did not mean to flash that. My apologies. That's not the share. Shaney, to me, it will be high probability after a liquidity sweep. Yeah, look at the context. All right, guys. So I don't see any more questions here. Let me see, check the Discord here real quick. Paul, I'll get to your questions specifically. I want to answer your questions directly in the, directly in the forum that we've created there. All right, guys, don't see any more questions here. Hope some was insightful. That's the analysis for the week. As always, I will update you guys in the Discord. There was no need for any updates last week because everything was delivering to script, so there's really no need for any updates or anything of that sort. But as always, if anything changes or if something has my attention in the middle of the week, I will always make you guys make that information available to you guys as it comes to me in the Discord. So if you guys want to check out those insights, be sure to join. My team usually uploads it here directly in the chat. So with that being said, guys, hope someone was insightful. Appreciate you guys and all your great questions. Glad to be here with you guys. Have a phenomenal rest of your week. Good luck and good trading. See everyone.